Hey, everybody. Brian Lelli from Zeroed In Marketing here. Just want to take a minute to introduce Chad. He came in. As you know, if you're in the Facebook group, I told you guys I was going to bring someone in smarter than me to talk about this stuff. So he was the obvious choice. We've been working together for a while now just to help out on the financial side. Because just like a lot of you, I started my business because I liked doing the business side, but didn't really know a lot about the back end side on the financial end. So stumbled across Chad, 2 years ago or
Yeah, a
something?
couple of years ago. Yeah.
And it's been great. I don't have to do as much anymore. I know I have a good team on the back end and they're great with communication. So they're hitting all of my core values. But Chad, I'm going to shut up for a second, let you introduce yourself and kind of talk about things. And then I'm going to pepper you with some good questions.
Yeah, man. I appreciate it, Brian. Thanks for having me on. No, I'm a CPA. I've been a CPA since 2001. So 25 years now. It's crazy. As we were talking earlier, I'm celebrating 27 years of marriage. So what that means is two things today. Remind me of how old I'm getting. But the reality of it, I've been a CPA for a while. Worked for CPA firms in the past, then ventured out on my own, got into some retail tax operations, and then really at that point enjoyed business, right? And learned a whole lot. I went from working in a CPA firm to opening up my own franchise operation, thinking it was the same thing, and it's not, but I did it because I knew how to do taxes. Much like I'm sure most of the people listening got into their business because they knew something or had a passion for it, and it turned into a real thing. So through that transition early on in the retail tax side, I had to transition from that tactician, the CPA doing the tax returns and everything, to more the entrepreneur, the business person, and deal with all the stuff, the IT, the accounting, the staff and the HR, all of it. And it was a big learning curve for me. And if you don't know, CPAs sometimes think highly of themselves and think they know everything. It was a real kicker that said, no, you don't really know anything. You know debits and credits and how to fill out a tax return, but that's about it, buddy. So kind of fast forward several years, we had up to 7 Liberty Tax franchises at one time. And then I decided that, hey, I'm going to back out of the kind of the retail side of things and focus more on the small business owners that are going through and doing the same thing that I had done, stepped out on their own, but not knowing what they don't know, right? And then you slowly learn and really help them through that learning curve. And then also mature businesses, helping them go from where they're at and get a better understanding of their financial structure. So back in 2021, we really started connecting with small business owners and doing more of what I call full scope. So what that means is in our eyes, there's 4 pillars to the financial management of a business. There's your accounting and bookkeeping, right? That's the ground level foundation. You need that. You have to know where your numbers are, not only for planning and the other 3 buckets, but just to know if you've got money, right? And how the business is operating. So accounting, bookkeeping is 1. Pillar 2 is more the controller/CFO, and that's a broad term depending on level of business, but it's really meeting with clients where they're at, discussing financials, kind of understanding what they mean and structuring them the right way so they get a good picture of their business. And then 3rd pillar is tax strategy and planning. How do we at least know what our exposure is, and then how do we mitigate it, right? And then 4 is simply the compliance piece. So we've been doing that kind of building up since 2021 loosely. 2023 is really when we started to go after it, but helping small business like yourself and others get a grasp of their financial information so they can focus on what they do best and avoid some of the pitfalls of not having that house in order, so to speak. So
then you guys do a great job. I remember the first tax season going through with you guys. I was expecting to get, a real swift kick in the ass like the year before, and I didn't. So that was good tax strategy, good planning. So, but yeah, kind of jumping off one of those pillars you talked about there, as far as, this is, mid-August, right? People are already thinking end of the year, like,
yeah,
how much money do I need to spend to lower my tax liability? So, and that's obviously something that a lot of people think about, but is that truly the right way to think about stuff? Like if you're a holster maker, or if you're a firearms manufacturer and you're like, I did great this year. Do I go spend $80,000 on inventory before the end of the year? Like, does this actually help? So kind of like unpack that a little bit, like walk through like just the right mindset for people to go into that sort of way of thinking.
Yeah. One of the big things that you have to understand in terms of spending dollars for tax savings, what your ROI is on it, your cash flow. So there's a lot of different variables. So I know you mentioned an example of, going out and buying additional inventory. Well, technically by the IRS code, you have to treat inventory as inventory. That's a balance sheet item. That is a asset. You're buying this stuff, putting it in this bucket over here is assets that you own, but it hasn't hit your P&L yet, right? Until you sell it. Then that cost of that inventory pulls over to your P&L and reduces that revenue or offsets that revenue. So theoretically, folks will go out and spend a lot of money on inventory. It doesn't really impact their bottom line until they actually sell an item. So I just got done reading a book, and I recommend it to anybody that has inventory that deals with this. It's called The Goal. And it's not really tax related or anything. It's more operational stuff, but it's really about inventory management and keeping that balance and those numbers low, right? So you're a lot of time, and they refer in that book that inventory is sort of like a liability,
Yeah.
right? Because you have to warehouse it, right? So that's a cost. You have to secure it. That's a cost. The longer it sits there, it ages and devalues potentially. So you don't want a huge stockpile of inventory, and it's not something you want to go do before, just to save taxes, because unless you're going to have a blowout sale and bang it out, and then net, you're making money on that inventory. It actually increased your bottom line and then offset it. So that's not a great strategy to lower taxes.
Hey, that makes sense. And yeah, the inventory thing, I mean, I've gone through with people we work with too, where they're just sitting on stuff and they got to fire sale it because of all the liability there. I mean, their warehouse gets broken into, it gets stolen, or it's just sitting there. It's money unused. It's just they took the money from their bank account, they put it on their shelf.
Yep.
So
100%.
not super helpful there.
Yeah.
And in the tactical space, the firearm space, there's a lot of conversation about banks and payment processors, who to go with, who not to go with, and like issues. We had a client a few years ago where Bank of America, they held $50,000 of his money for 90 days. Obviously, he transitioned out of there once he got the money back. But is there anything that you can talk about from your perspective where this happens, where they realize they're in bed with a processor that's not going to be the best solution for them, and they move somewhere else? Is there any negative to that from a business perspective, or is it really just unplugging here and plugging in there?
From a business perspective, I think you have to look at a couple of things. Is like, what is the overall risk, right? Like, is that why you're moving? And if you do move, does that increase your risk? Really understanding why the move is. A lot of times I see folks move just simply because of rates and all that, and they move. And I'm not an expert in the payment processing industry, but I'm assuming jumping around is kind of like on a resume. You're looking for a job and you've been at this job for 6 months, that one for 12 months, this one for 3. That doesn't look so great. So you might be put into a higher risk bucket per se. But in terms of managing through kind of a crisis like that, is to think that it could happen, right? If you're with a payment processor and they could pull the rug out from under you, how do you mitigate that? One is understanding how much they could hold up if that rug was pulled out. If they do pull the rug, is it just a timing difference? Like, instead of getting paid 10 days, it's 90 days? Or what's the risk of losing it all? Is there a risk there? And then kind of conceptually coming up with a number that could happen, and then a percentage each month you can offset into a separate account to manage if that does happen, so you don't fall into a cash flow shortage. Because that when you run into a cash flow shortage, what it does, you might be able to get through, but a lot of times what I see a lot of anymore is folks will go out for that short-term financing, and then they'll get an MCA, merchant account, or whatever it is. To me, those are somewhat predatory in that it's easy to get, but it's at a high cost, and they make it very easy to roll it over. And then pretty soon that thing balloons out of control. And now we're in a bigger cash flow crunch than we were, just because the payment process or whatever cash flow was short. So I'd say set up a reserve, maybe, a couple of percent, whatever the math works out, if you kind of analyze your risk, and then set it up as a kind of a a separate account and transfer that over.
Makes sense. Sounds like you almost want to have like, your operating account and a business savings account. Kind of treat like, I know at our house we have, your emergency fund, like if you want to just, you lose your job, you have 6 months of revenue set aside, obviously you accrue that over time and build that up. So should something happen, you're in, like, just think about it the same sort of way, it sounds.
I'll give you an example, and this is real life that we're doing right now. Is we've got a client that's a new manufacturing company. They're doing well, but it's about ready to blow up, and they got a large contract to build 20 units. It's a trucking equipment units, pumps, really, that they use at airports to pump gas into planes. They build the pump. They got an order for 20. It's about a $3 million deal. There's contingencies in there. It's due by X date, all 20, and it's 1% a day per unit if it's late, right? So we're building, and what's the likelihood of them being late, So we're not banking on all that revenue. We're setting up a liability for a small percentage on each unit to keep on as a liability on the balance sheet. So they know that that's their potential exposure. And then if there's no penalties at the end, then they can release that. But being prepared and knowing what could happen, what may happen, if it does, the ins and outs before it does happen, I'd say that's the best business move.
Makes sense. No, it's good to have, someone to talk to and bounce those ideas off of, and kind of, because they come up with the questions that I wouldn't ask. So it's always good to have that side. And it's funny because you mentioned 3 million. So my next question was scaling, right? So when a business is maybe we're coming to that end of the year where they're going to start selling, a lot of people in the e-com space, it's Q4, Black Friday, all those things start to accumulate where, their business does scale. So when you see companies make those big leaps in revenue, like what do you see typically on your side break, and how can they mitigate those issues? I'll just leave it at that.
Yeah. So one of the biggest things is if they make a significant jump in business, and we've done it, is the resources to deliver, right? If you go from 500,000 to 3 million, I think, as you mentioned in one of your messages, that's a huge commitment. And not only if you're inventory business, that's a huge commitment for inventory. That if you need a lot of inventory, that's cash flow. If you need lines of credit, vendor accounts, those sorts of things, are those in place? Right? It's all forward looking, like this could happen. And if it does, is this in place to do it? So having the right business credit in order to secure those vendor accounts or those lines of credit to be in place and ready for scale. A lot of times folks will get the orders. It's easy to sell, right? And once that momentum's created because the marketplace sees you or hears you or it's getting talked about, you scale too fast. You don't have all the pieces in place or the plan to execute to survive that or to get through it smooth, because a lot of times folks will scale and then there's no deliverables and then they sink. In our industry, I've seen folks, especially with social media, they become the tax planner, the tax strategist, the influencer that everybody sees, and then all the business comes in. Now they're getting sued because they were unable to deliver, and they got late filings, poor tax strategies, it's just a mess, right? So it's easy to sell, hard to deliver, but you can ease that deliverable by having a plan in place, if this and that. So right now it's critically important, if you're at that small level, SOPs, systems automation, things as a supervisor that you want to build out your org chart as if you're there, right? Like, what pieces am I going to need? So you feel that momentum building. Here's piece 1. I got to pull that piece in. Piece 2. This is piece 3. And then a methodology or a system where you can see the 30,000 foot view. You can see all the pieces moving around, maybe not physically, but at least mentally, you see the pieces and how it flows. Having that in place is very important. But I've seen companies, kind of blow up, never had a CRM, didn't have SOP,
Yes.
had to hire people. Then they're afraid our people aren't worth a darn. They don't know what they're doing because you didn't have a training program in place. You're putting out a fire mask, so you're getting bodies off the street that, 1, might not be the right fit. 2, you're sticking them into something that they don't know what the hell they're doing. And 3, there's no system that they can refer to say, hey, what it's you kind of barking orders, and then they're going over here and over here and over here. So it's all about being proactive and planning for that.
Hey, I've seen those things happen so many times. It's wild. And on the back end, like that's just they do scale and if they don't have those systems, the foundation in place, you get yourself into some issues where as you're scaling, let's say you're buying inventory, you're buying machines to do this. What happens after? Like, did you just get that one big order and now you own this equipment? You owe on that, or how do you deal? How do you keep it up? Like, there's so many questions that can be answered when you have the foundations in place, or you have that forward thinking where like you're going to rent the equipment for 6 months, whatever the case is. So there's 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 a lot to be said about thinking a little bit beyond that. And it's weird to think for business owners that might be making on the lower side right now to think, what happens when we do get to a couple $1,000,000 a year? Like, I'll worry about that when I get there. Like, no, you need to have the foundation in place so you can get there and you can survive it.
Yeah. Yeah. And then also, I mean, you brought up a good point, is recognizing whether it's just a temporary blip, that, okay, for some reason you blew up this Christmas, right? Or Black Friday. Maybe you had a post go viral that Brian was helping you with or whatever. That's great. Is that going to translate into January, February, March? Right? Because back in the day, I used to work with a number of retailers. They were in the red until November and December. Every other month was in the red. They were little boutique vendors or retailers in malls and stuff. And one year they didn't hit. I mean, they just didn't hit. It was kind of at the beginning where the malls weren't kind of the thing anymore. You had your outdoor malls, you had, the Amazons, the online stuff, and they weren't ready for that. They weren't ready. They didn't have an online presence. It was just, they were in a mall, and they had to collateralize a lot of their assets to make it through that and get financing. So just being prepared, asking the what ifs. People always tell me, not always, but sometimes I come across as negative, or especially with entrepreneurs, negative or worried or conservative or whatever it may be in that kind of bucket. And it's because I ask the devil's advocate questions. Right? I've been on the entrepreneurial side. I've reacted and from emotion and excitement of opportunities and acquiring stores and doing this. And I was buying stores 300 miles away, right?
Yeah.
And then something happened that it was a gut punch, right? But I was operating on emotion, sitting back, thinking the what ifs, the and buts, the worst case scenarios. And now, dude, I'm reading a book now. I think it's the AI driven leader. And, I've used it, but I'm learning how better to use it. You have the best business consultant that you could find in AI to help you sort through this. So if you're a solopreneur or got a small shop, it's a husband and wife deal, you need to learn how to use AI and prompt AI to poke holes in everything that you're doing, right? And not do it emotionally, because it doesn't have any emotion towards you. At least I don't think. I mean, some of these guys got girlfriend AI, whatever, that's a different story. But learn how to prompt it. I mean, AI can tell you how to prompt it to be a devil's advocate, to be your thought partner, hey, here's my business strategy. Here's my plan. What do you think? Poke holes in. Present worst case scenarios. If this, then that. And it'll help expose to you what you should be looking at. And you can do it in a matter of minutes versus kind of looking at it. I don't know who to talk to. I don't know where to get this knowledge. I don't know what questions to ask. I think AI it is a huge tool for small business owners now to get a consultant. And I'll tell you what, it can pass the CPA exam in all 50 states. It can, I think it was 70 or 75% of the time it passes the MCAT to get into med school. Medical facilities are using it. Corporate America is using it. It's a thought partner though, right? So it helps you see what you're not seeing, but you're the thought leader and you have to say, this isn't right. This isn't right. Because I've used it and it's like that's totally off.
Yeah. You gotta push back on both sides. Like I asked ours to push back on me, and just yesterday I was running some numbers and they didn't look right. I pushed back and it's, oh, sorry, I assumed this. Like, yeah, well, if I had run with what Claude at this point said what I was writing would have been wrong, I would have looked dumb.
Yeah.
Oh,
Right.
yeah, you got to prompt it to push back, but also prompt yourself to remember this is basing off of information that might not come back correct. And yeah, it's a
Here's
great.
one thing, and I know we want to keep this short, that I would tell people: don't assume. Right? If you think you can spend $100,000 on inventory and save taxes, ask AI. If you don't have a CPA, just ask it. Is that reasonable? Am I going to save taxes if I buy inventory?
Yeah.
See what it says. But don't assume anything. Always have a vision of the best, plan for the worst, and everything in between.
Perfect,
Right.
man. Well, if people want to ask a real human questions, what's the best way for someone to get in touch with you?
Yeah, they can email me. It's Chad@Kinsler, or they can just Facebook Chad S. Brown. They should be able to find me. I post stuff every day for the most part, at least Monday through Friday. Some videos might find helpful in business life, just general stuff.
Sounds good, man. I'll drop the links in the description and we'll let you go rucking with your wife on your anniversary.
All right, brother. Appreciate it.
Thank you so much.
All right.